Hello everyone, welcome to my YouTube channel. This is Srinivas. In this video, I am coming with a new strategy, again based on RSI. Earlier I posted similar videos on RSI strategies, but I found some problem with those strategies, even though they worked over a period of 20 years. But when I started backtesting at different time periods like 2006 to 2024, then 2010 to 2024, 2015 to 2024, likewise, I didn't find the consistent results among different backtest results. So again reworked to have a consistent returns whenever you select any time period of, let's say, 5 years, 10 years, 12 years, whatever it may be. So that's the reason I have to come up with a new strategy in this video. Strategy is again based on RSI, but this time it's a 2-period RSI instead of 14-period. And it's again weekly charts. And there's a 60-80 rule I'll discuss when I'll be explaining the strategy rules. I'm naming a strategy as RSI 2W 6080 so that in future videos I can refer the strategy by this name only. Okay. So what are the stocks we are going to consider in this strategy? 41 stocks listed here. So these are mostly quality stocks. They will be there for next 10-15 years as well. Of course, they're given good results over the last 15-20 years. I'm assuming that the similar kind of returns we can expect in the future 5, 10 or 15 years. Even something bad happens to 1 or 2, 3 stocks and even they get delisted, we can just ignore those stocks whenever they're delisted from the NSE. Otherwise, we can just continue using this strategy and the list of these 41 stocks for the next 10-15 years. Let's look at the CAGR values. Okay. The columns here is number of years and Nifty 50 returns over this time period, and RSI 2W 6080 or our strategy, what is the returns and how it's beating the index by what percentage. Okay. Look at 2005 to 2024, that is a period of 20 years. Nifty gave 13.4 to CAGR, whereas the strategy 19.28, beat index by 5.86. 2006 to 24 again beaten the index by 5.29. And then next 18 years 7.57. Then 2008 to 2024, this strategy gave 19.57 CAGR, even though Nifty gave just 8.82 CAGR, because we started at the start of the peak 2008. Despite we started peak of 2008, by 2024 we have the returns of 19.57 CAGR, which is a very good performance compared to Nifty 50 benchmark. Again, likewise, to the 9 to 24, you see, and we are again beating the index. Yes, here only in the, I think 2015 to 2024 period, we have less returns, 14.45. Even that, we have beaten the index here as well. And yeah, if you look at 2018, 19, 21, 22, 24, 23, 24, September. Okay. So the year is not completed yet. So I considered in the backtest report up to September 30th, where the Nifty made a high of 26,000. In this backtest, the closing candle of September 30th is 25,800. So I'm considering September 30th as the last day of this backtest. Okay. So only this year we have not beaten the index. Of course, the year is not yet completed. 3 months more left. Okay. So I will again do a backtest in 2025. And I will let you know whether this strategy beaten the index in the 2024 year or not. I mean this current time period. Okay. And the beauty of the strategy here is, if you look at this column, right, this one, except this 2015-24 time period and this 22-24, except these two instances, if you look at all other places, it has given a good returns like 18 to 20%, which is actually consistent. Whatever the time period you select, whether it's 10 period, 12 period, 7 years, 5 years, whatever it may be, it has provided consistent returns. That's the beauty of this strategy. Okay. So we don't have to worry about whether you're starting this year, next year, doesn't matter. Even if you start at the peak of 2008 financial crisis, still it made a really good returns for the long period. Okay. And if you look at the average returns of Nifty 50, when you consider different time periods, that is 13.91, and this strategy provided 19.43, where we are beating the index by 5.5% and on average. Okay, let's go to the next slide. Not only returns, we have to calculate the maximum drawdown percentage as well. So let's see how the drawdown looks like. Yeah, 2005, 2006, 2007. Okay, if you start in these years and you stay till 2024, of course the returns are good, but the drawdowns are almost equal to 50%. Okay, the drawdown date actually happened in 2009, March 2nd. Yeah, that is after the financial crisis. Okay, but surprising, if you start this strategy in 2008, January 1st at the peak, we didn't get that much drawdown. Okay, we got only 40.91% drawdown. That is again hit on March 2nd of 2009. Okay, then going to 2009 to 2015. So after that, the next drawdown came, let's say 24% when you start this 2009. That is on 2020 May 4th. This is during Corona crash. Okay, so whichever period you select from 2009 to 2010, so the maximum drawdown got hit on May 4th, 2020, which is a Corona crash. So if you see 2012, 31%. If you start in 2013, you hit 31% again, more or less same. So all this drawdown hit only during Corona crash after financial crisis. Okay. Next, 2016, 31%. Yeah, this is the highest after Corona, after the financial crisis. And the rest of the years, if you look again, same thing. The max drawdown occurred during the Corona crash. And after Corona crash, you got maximum drawdown on June 13th, 2022. That is around 14 to 16%. And here again, 22% drawdown in 2022. And there is no drawdown, of course, here. But yeah, this is still September 30th in the current year. This is how the drawdown looks. If you are capable of, if you can hold up to 40 to 50% drawdown, you can just continue the strategy. Again, if you're expecting around 19 to 20% CAGR. Then let's see one more picture, like what will happen if you reinvest the dividends that you receive. See, these strategies like swing trading, most of the time you're having stocks in your portfolio, and I'm assuming a decent 1% yield, right, on the dividend. And you just accumulate all the dividends for the entire year, and you put all the dividends into the portfolio again at the end of the year. Okay, if you keep accumulating the dividend and adding at the end of the year, how the returns will look like compared to the base strategy. This is the base strategy returns as shown in the previous slide, and this is adding dividend yield of 1% at the end of each year. So the returns will be like this. So more or less 1% more compared to the normal returns. So if you look at average returns here, the 20% CAGR you're getting, and average whatever the period you select, okay, so it's giving more or less 18 to 20% easily, except this 2015 if you start, and if you start in 2022. Okay, but that doesn't matter. You can start adding new capital each year. Of course, that will average out the different time periods. So overall, you'll get good returns. And if you look at the amount wise, assume that you started with 10 lakh capital in each start of each year, and at the end of each year, what will be the value here? In 2025, this is 20 years, it become 4.1 crore. From 2006, if you stay till 2024, that is 2.6. And somewhere if 2009 performed better, even though the number of years from 2009 to 2024 is 16 years, this gave really good return, 3.64 crore. And likewise, so to make 10 times of your capital, I think we need to wait at least 12 years. Maybe so if you're lucky, you may get 10 times of your capital in 10 years as well. But yeah, 10 to 12 years would be good time to get 10 times of your original capital. Okay, this is how the returns look like. Yeah, so how the compounding and rebalancing method is considered in this backtest report. Please watch this complete video. As mentioned here, I'll provide the link of this video in the description box as well. Just go through the video to understand the compounding and rebalancing, so that you can use the same method when you actually do invest in the live market. Okay. Next, coming to the strategy rules. So what are the strategy rules? Time frame is weekly. Again, the list of stocks as I mentioned in the first slide of the presentation. Then indicators 2 period RSI, not 14 period. Just make sure. Filter the stock that satisfies the below 2 condition. Again, current week and previous week candle should be in green. Okay. Second, the current week RSI should be greater than 60 and it should be less than 80. Okay. Then only we are going to filter the stocks. So what are the stocks you filter at the end of the week? Just arrange the stocks in the descending order of the RSI value. And what are the top stocks you select, and based on the portfolio, how many stocks you're going to buy during that time. Just select only that many stocks from the top. Okay. And then start buying based on the method I provided in the compounding and rebalancing video. And the stop loss is the minimum value of current week low or previous week low. Whichever is minimum, that is our stop loss. But sometimes what happens, there can be very small candles. Okay. In that case, our stop loss may be 1%, right? But we are not going to have 1% stop loss. We have to have minimum 2% stop loss from our entry. Okay. And similarly, when there is a very big candle, the stop loss can go beyond 10%, 15%, 20% as well. In that case, we are going to restrict our maximum stop loss to 8% only from our entry. And we are not trailing. Okay. So if you do trailing, the strategy is not going to work. So most of the times, the market fluctuates a lot due to the volatility. It will hit the stop loss and it will again go up. So we do not trail for that reason. And target is the 10 times our stop loss. Okay. If your stop loss is 4%, your target will be 40%. If your stop loss is 8%, then your target will be 80%. Okay. And make sure at any point of time we have only 10 active trades present in our portfolio. Okay. And what is the capital allocation risk? If you're starting with 10 lakh capital, then maximum trades at any point, that is 10 again. And initially you invest 1 lakh in each trade. Right? Over the period of time when you compound and rebalance your portfolio, obviously that amount keeps changing. That amount to invest in new trade is as per the calculation I mentioned in the compounding and rebalancing video. Please watch that for understanding completely. And max reward per trade, generally we have the 10 times of stop loss, right? The max stop loss we have is 8%. So the max reward you can get is 8% into 10, 80% on a single trade. Of course, the single trade can span over multiple years. Okay, I explained that in the compounding again rebalancing method video. You can for understanding. Okay. Yeah, let's analyze backtest report from 2008 to 2024. Here is a backtest report of 2008 till 2024 September 30th. Okay, here just if you look at the values, the max drawdown again 40.32%, and max drawdown date that we encountered in 2009 March 2nd. Okay, the CAGR 20.7%. Okay, and this is how it performed. Okay, in 2008 we started, we lost 30% of capital at the end of the year. We resulting to 7 lakh capital from 10 lakh. Then 2009 gave us stellar return 84%. Then it became 12 lakh 75,000. Like 754 minus 241, 41 minus 1 plus 2, whatever, 35, 17 again. So the end portfolio is like 2.4 crore. The starting capital was 10 lakh over the period of 17 years. Okay. So how exactly this performed? The all values for locate. Let me just explain that as well. See, we started in 2008. The portfolio started with 10 lakh. Initially, we got one stock here at 1 lakh, and then cash will be 9 lakh. The total portfolio is total 10 lakh. If you look at, we are entering the new stocks, and some stocks are getting stop loss, and again they are adding to the cash. The total portfolio like 10, 9, somewhere here, yeah, we completely invested into stocks, and our cash is become zero here. And look at 2008 April, then May. Again, we are getting some stocks are getting stop loss hit, and they are coming to the cash component. The cash component, if you look at the overall portfolio, the stock portfolio plus cash component is getting reduced. The total, the drawdown is increasing. See, so the max ready so far this one, drawdown increasing drawdown, and somewhere here, if you look at 2009 March 2nd, this hit highest drawdown of 40.32. That you lost around 4 lakh from your 10 lakh capital, and you are left with only 6 lakh here. This is the max drawdown we hit in this period. Okay, and there is a sharp reversal recovery from here. So the drawdown in current drawdown. This is the current drawdown, and this is the current the total value of your cash component plus the portfolio value will increasing. Even though the stocks hit targets, maybe stop loss, whatever it may be. Yeah, it's keep on increasing again. By 2009, September 7, we came to our original capital. The drawdown is 0 here. Okay. So if you start in 2008 January, and it took almost 1 year, 9 months to just recover and come back to your original capital. So that's how the market works. You just need to follow some strategy and stay with the market. Then only you'll make money. If you fear and stop the strategy, or you sell out all your holding, definitely you'll end up in the loss. Okay. And over the period of after 2019, just keep looking at total value of your entire portfolio, cash based portfolio. So it's keep on increasing. Sorry. See the current drawdown 10%, whereas maximum is still 40%. That is in 2008. So by 2000, let's going to 27 lakhs of portfolio. Okay. So went to 32 lakh here, 35 lakh, then 40 lakh here, again 40, 45, 52. It went up to 60 as well here. Somewhere again come back to again 54, from 60 lakh to 54 lakh, 10% drawdown. Then going back, like there is a 16% drawdown in 50 lakh. So we came again altogether from 60 lakh to 50 lakh. You have 17% drawdown. So then again come like this. So our portfolios keep on increasing, 80 lakh, 86, 78. So by 2019 end, we have 80 lakh portfolio from 10 lakh and keep on increasing. Then we went up to 93 lakh. Here again, there's a drawdown. We come back to, let's say 21% drawdown, 74 lakh again from 94 lakh. Okay. And yeah, this time there's a cash component is increasing because we are selling first stop loss hit maybe. Okay. And again, the portfolio coming down and again going up. So it hit 1 crore in 2020. That is after 12 years. The 10 lakh your original investment hit 1 crore here. Okay. And then keep on going. The DD of very less percent again. Yeah, it happened like this. So if you look at the end value in 2024, by the end of September, we have 2.4 crore portfolio value. Of course, here we are fully invested with a zero cash. Okay. Yeah, this is how the strategy works. I hope you understand how the strategy works, and if you believe the strategy and if you are happy with the returns of 20% CAGR, considering the dividend investment, you can go with the strategy and happy investing. And for more backtest reports, complete backtest report, you can visit my website here. Of course, I have not updated the reports, or I have not created any new articles over the last few weeks due to time constraints. I'll be creating all the new articles. Thank you all. That's it for the day. Bye.